Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. On Monday, we took a total of 8 trades, 6 winners, 2 losers, for a total absolute return of $4,935 or 3.1% in our 1% risk model portfolio, where we are risking no more than 1% per trade. Most of the profits came from 74.85 long calls, played at 3 times, the best trade, 140% return. Clearly, it was choppy, hence the large number of trades, but overall, a good session, plenty of opportunities if you were tactical. On the session, the SPX traded lower, closing down 0.37% to 74.72. The theme was rotation, cyclicals bid, technology up 0.4%, semis up 1.4%, Mag 7 names down 2.2%. So that weighed on the S&P 500 yesterday. Although with semis up, technology up, not that bearish. Hence the sideways choppy type action we saw for most of the day. Now, there was some volatility here near the open, the first hour of trade. We opened above 7,500, broke the previous session's high of 7,511. That is a continuation signal. However, false break as bulls were unable to break the FOMC levels. So we had the FOMC reaction high at 75.18. We had the session high at about 75.25, 75.30. And this was a pretty clean rejection, a big move down, false break of that previous high, break back below 7,500, and then taking out the transitional levels, which is a very bearish signal. Now, we ended up finding support at the previous session's low, 74.68, 0 gamma 74.60, and we just chopped in between these two big levels into the close. In terms of the 85 calls, we were buyers at this upsloping trend line, previous session's low. Now, our view quite early was that the low was in, and we would just base sideways amid the neutral conditions. That was consensus among our team. So when you do have choppy conditions, rotation, it generally pays to be a little bit more tactical, hence the large number of trades. I did take some trades on the downside as well. No home runs. But overall, just kind of a choppy session. But again, profitable if you're tactical. For today, early pre-market, the S&P 500 is trading lower, down 1.5%. NASDAQ down 2.7%. VIX up 18% above the 20 handle. It is clearly risk off after breaking our risk off pivot in yesterday's session, 74.90. That remains unchanged today. The previous session's low, 74.60. A break implies continuation, which we are most certainly seeing. In terms of major support on the downside, we have 74.30 is 0 gamma today. 74.20 gap fill at 74.20. But below that, we have 7400 G1 big gamma level. SPY put wall at 73.79. And then we have 73.50, 73.45. And opening down 1.5%, we are going to be, we're somewhere in this range around the SPY put wall. So there's going to be a lot of levels for the bulls to reclaim. Upside today is heavily dependent on a vol down environment. So keep a close eye on the VIX. There is squeeze potential. Now, levels to focus on here, 20.5 on the upside. This has been the peak in the pre-market thus far. A break opens the door to the 22 handle. Now, I'm sure there's going to be some resistance in here, 20.5, resort to those hold numbers. But if we just go back here, it has been a bit of a chop zone recently. Now, in terms of the downside, we have 20, which has been the pivot, a very large open interest strike. 19 has been the true price action pivot for several months now. We got a large gap on the downside, 17.36 fill. Some levels in here, 18.2, 18, and then that 17 handle. The SPX remains below our main transitional level, 74.90. That is the volatility flip. Below, all strikes are negative. That is destabilizing for the market price. So when we're below the flip, we do anticipate elevated volatility as dealers chase delta, sell weakness, buy strength. Support on the downside, 7,400, big net negative gamma strike, However, it is no longer the put wall. That put wall has shifted lower to 7,200. That's a bearish indication. Now, the SPX put wall is not in play today, but the SPY put wall is. That shows at 735 or SPX 73.79. So that's potential downside target and lower bound today. In the event we do break, it opens the door to 73.50, 73.45.